Good morning. Welcome to Wednesdays with Wendy. Had a bit of a minute there. I didn't see the button that said I was live, so had to check for that. I hope you're all doing well on this Wednesday, April 16th, the day after tax day. I hope you all got your tax return filed or your extensions filed last night and that everything went the way you wanted. You knew exactly how much was coming back. You knew that the amount you paid in was very close to the amount you owed, even if it was off a little bit, and everything's fine. That would be great, right? Okay. For the rest of us, let's talk about what to do if that was not the case. But first, if you're just joining me for the first time, my name is Wendy Kane. I'm the owner of Kane Accounting and Financial Coaching. I do bookkeeping and payroll for independent contractors and small businesses so that you can have peace at tax time and throughout the rest of the year. Okay, tax day was yesterday. As I said, I hope you got everything filed. As a quick note, if you are in Arkansas, we had some breaking news. The federal government, due to the storms, the tornadoes and flooding we had a week or so ago, the federal government has pushed our federal tax filing deadline back to November 3rd of 2025. Then the governor has pushed the state filing deadline back to July 31st of 2025. They tried to get them on the same day. For some reason, they were unsuccessful. Don't ask me why. Anyway, if you are in Arkansas, I've made several posts about those two things. You can go read those on my page. Um, for the rest of you, I hope tax day went well. But that's what we're talking about today. What if it didn't go well? What if you got your return back and you were shocked? Shocked either because your refund was less than it has been in recent years, or even less than you thought it would be, or what if you had to pay and you were like, whoa, 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 I already send enough money to the government every month, every check. I don't want to have to send more in April when I really don't have it. So, what do you do then? How can I keep this from happening next year? Well, today I want to go over 5 quick, simple strategies to help you pay less in taxes, owe less in taxes, or at least have a better understanding next tax season what your tax return results will look like. All right, the first is going to be kind of obvious, but go with me here. You're going to have to pay more in through your withholding. If you are an S corp owner and you run a W2 payroll on yourself, or if your spouse has a W2 job, you're just going to have more withheld. Unfortunately, to some for a large extent, taxes are just a math game. This is how much you owe, this is how much you pay in with each check or each month. If you pay in more than you owe, you get that money back. If you don't pay in as much as you owe, then you got to send it in when you file your tax return. So that is simple. I did a video on how to fill out the W-4 because that might be where some of the problem is with not having enough withheld. So you can refer back to that video if you want to know more about that. The second option, this is for my single owner LLCs and even S corp owners too. You can pay more in quarterly estimates. So this is where if you don't have withholding, if you're not on W-2 payroll and you just have to figure out how much do I need to pay in, not only does the IRS want you to pay in every quarter, but it's really beneficial for you. It's hard to save up all that money and not accidentally spend it on something else. Or think, oh, I don't have to save that much. And then when it comes time to pay it all, you don't have that amount. So you can go through and pay more in estimates. Um, I believe I did. Have I done a video on that? I think I need to do a video on that. I've done some blog posts on estimated tax payments because the due dates, they don't follow the fiscal quarters like you're used to. So I'll put a link to a blog in the comments to help you with that. All right, meet with your tax preparer mid-year or in the fall. If you have a professional, preparing your taxes, it is a very, very good idea to meet with them at least after June and even on into like October or November. What you can do, you can see how this year is going, compare it to last year, and see about where you're going to be as far as how much tax you will owe. This goes for individuals as well as businesses. You can look and they can use their software to estimate with current year rates and everything how much you might owe for next year. And what this does, meeting with them mid-year or 3/4 of the way through the year, it gives you time to make adjustments before the end of the year. Once the calendar flips over from December 31st to January 1st, there are many, many options that are no longer available to you to affect your tax liability. There's still a few things we can do, but we're not miracle workers. We can't go back in time and pretend like we did it this way. Like I said, there's a few things, but not many. So if you meet with the tax preparer before the year is up, they can give you some strategies and tell you, oh, you're either going to want to make a payment now or put that off or do this now so that you don't owe a ton of taxes. What used to happen when I worked in tax offices, we would have people come in, in March or April, or more likely July for the extensions, and come in and go, hey, I did a thing last year. It's really big. It cost a lot of money. This was a lot of money. I hope I don't owe a lot of tax on that. And this was the first we were hearing about it. And, a year later, 18 months later, there's not much you can do. What's done is done. And if they had just come to us the year before and said, I'm about to purchase this equipment or buy this building or sell these things, the tax preparer can help you structure the deal legally, by the way, so that you owe as little in taxes as possible. But we can only do that in the current year. We can't do that next year when you go, oh yeah, by the way, this is what I did. So please, please, please make an appointment with your tax preparer. Again, they're not likely to reach out to you. They should, but they won't because many of them are introverts and they're also very busy. So reach out to them um, sometime mid-year, before Christmas, and see what they can do for you. All right. The fourth strategy here is to know your deductible expenses. I've gone over this before, and remember our two words, ordinary and necessary. An expense is tax deductible in your business if it is ordinary for your industry and necessary to complete whatever you need to complete for your service or your product. So, the IRS has a long guide, but unfortunately, there's not an exhaustive list of every single thing that will always be deductible or is never deductible. There's not a list for every business in every industry. You just have to go by those guidelines. But it never hurts to look at some stuff. There may be some things that you're paying personally that should be going through your business. There may be some things that your business is paying that the IRS is going to be like, yeah, that's not deductible. Your tax preparer may tell you, no, that's not deductible. And so it's good to know which of those are which so that you can make sure you're getting the most out of the deductible expenses for your business. All right, our fifth strategy, my favorite, keep your QuickBooks updated at least monthly. You need to set aside some time. If you're doing your own bookkeeping, you need to set aside some time every week, every month to go through and categorize, excuse me, categorize the expenses that have come through your bank and credit card feeds. Get those into QuickBooks, and then you'll be up to date. You'll know if anything in QuickBooks got off. You'll be able to run a profit and loss report that will show you just how much money you made. Your profit and loss report, it's also called an income statement. And it has at the top, it's the income. This is money from sales. Whatever you do to sell your product or service, that money goes up there. Then your expenses are listed. Then you subtract it. Hopefully you have the positive number at the bottom. That's called net income. If you have a negative number at the bottom, that is a net loss. So if you can run your, we also call it a P&L. You run your income statement, your P&L, at least monthly. That gives you some idea of how well you're doing this year and how much income you're going to have to pay taxes on next year. So if you can keep QuickBooks updated monthly, you can use that information to look at your tax liability and see where you are. I know I always think it's kind of ironic because on the one hand, when you look at a income statement, if there's a lot of revenue there, you would think, hey, I mean, isn't that the goal? I mean, most of us are in business to make money. We want to serve our clients, sure, but we want to make some money doing it. So if you have a big revenue number, that always makes me think, wow, wouldn't you be excited? I talk with so many business owners. When they see a large revenue number, it usually results in a large net income number, and they freak out because they know that means they're going to owe a lot of tax. So, this is information that you would like to find out in March, June, September. You would like to know that information before the calendar flips. Because, like I said, you can either um, make adjustments so that you don't owe as much, or if you're having a great year, you can set money aside or pay it in with estimates so that when you hit file the taxes next year and the tax liability is larger, you've got the money to pay for it. All right. Those are my 5 simple strategies for what to do if you were not happy with how your tax return turned out. I hope those are helpful. I hope you will meet with your tax preparer and look at some of these and follow up on them. It really pays to do that. I know for many business owners, they don't want to think about it. They'd rather do their business, the thing they went into business to do. I know you didn't go into business to do QuickBooks or learn about taxes, and I get that. But unfortunately, it's kind of like drinking enough water and getting enough sleep. If you ignore the tax side, the financial side, it's going to come back to bite you and not in a good way. All right, that's all I have for today. I want to remind you that no one is born knowing how to do this, and it is not taught in school. If you are overwhelmed or have questions, it is okay to ask for help. If you found this video helpful, please like it. Follow me on Facebook, head to my website to sign up for my newsletter, read my blog, and find out everything else you always wanted to know. Y'all have a good day.